Within the next few months, there's going to be a pandemic that disrupts the global marketplace, kills millions of people. There will be major political and societal events.
Grinds in different industries to a halt.
Forcing people to stay home. And the question is, do you still invest? I am Matthew. You are Nathan. We're beginning to get questions and concerns about the state of the world and whether or not that should change the way people are approaching their investments. Over the weekend, bombs were launched in Iran.
Yes.
And we can see that the world's powers are kind of rallying around this new conflict. And this is just after watching, the leader of Venezuela get disappeared, overnight, disrupting numerous things in the world and killing innocents. And here we are again with the leader of the Board of Peace starting another war, yes. Right? Yeah. And so people are worried. People think that because something's happening in the world, they should potentially reconsider how they're approaching saving for retirement.
Yeah, and I'm a ravenous business news consumer, and just sort of the general theme is all of these things create uncertainty.
Right. Yeah, uncertainty is a very common theme, and my question or my mental exercise to take people through was something I went over with Nathan at lunch, and I said, I am the ghost of market future. And I visit you in late January of 2020, let's say, and tell you that within the next few months, there's going to be a pandemic that disrupts the global marketplace, kills millions of people. There will be major political and societal events.
Grinds in different industries to a halt.
Forcing people to stay home.
Leads to documentaries about COVID on cruise ships.
Absolutely. Absolutely. There will be civil unrest due to police brutality. There will be mass shootings, right? There will be the Pentagon finally admitting that aliens fly in our skies, right? I come to you with all of this information in January of 2020, right before you write a big check to your financial advisor.
I'm not sure what to do with that.
Right? And the question is, do you still invest, right? Do you still invest having someone come to you and visit you and tell you what the future holds, and then none of it is good, right?
Yes.
And I think most people would say, no, I don't think I would, right? Because all of that sounds scary. All of that sounds like it could really affect me in my future. And I don't know with that uncertainty if I should move forward with investing in companies that operate in this world that's in so much upheaval. Mm-hmm. And I think we have to first acknowledge the fact that like the human toll of all of this is just devastating and heartbreaking.
Totally agree, yeah.
Stories of, schools being bombed and children being hurt are just never going to be okay regardless of their justification. Or who is doing it. And sometimes you do want to curl up into the fetal position and just stop and forget about it all and not move forward anymore. But the fact is, everybody has to live their life with all of this happening in the background. Mm-hmm. And we have to still move forward. And so, let's just put that on the table because that is not lost on us. It can be it can feel weird sometimes in the midst of these global traumatic events to talk about money.
Yeah.
It can almost feel
a little insensitive.
It feels insensitive, yeah. But I think it's natural for people to think, how does this affect me? After realizing that.
Does this affect me and am I going to be okay?
Yeah, am I going to be okay? And at the end of the day, that's what people are looking for when they call with these questions. So that's the question that they're not really asking is, am I going to be okay?
Is my family going to be okay? Like, are my short-term, long-term goals, am I on track? Am I going to be okay?
And so I guess that exercise of taking people through that thought experiment, what would you do if you were visited by someone from the future that knew all these things were going to happen, mm-hmm. is the outcome 6 months later now is that, someone investing in the Canadian market has doubled their money since March of 2020. Mm-hmm. Someone investing in the U.S. market has doubled their money since that point in time. So horrible things happen in the world, but there are people whose job it is to continue running their companies and continue trying to find ways to make money. And they continue to do that while these things happen in the world. And those are the things that we invest our clients' money in for their eventual retirement. And at the end of the day, we're investing to help people protect the purchasing power of the dollars that they're earning today, so that in the future that those dollars can buy the same amount of goods or more of those goods than they can today. Because if you put that amount of money under the mattress or in a box in the yard underground, inflation would eat away at the amount of things you could buy with that money. Your purchasing power would erode.
Yes.
Because a jug of milk or a bag of milk, for those of you from Ontario, will go up in price, but those dollars will not appreciate in value unless they're also invested in something that's going up in value.
Yeah.
And at the heart of it, that's why we're investing, is to protect purchasing power.
Yeah.
To do better than that is obviously a nice thing, and we would like to see that for everyone. But at the heart of it, we're trying to protect purchasing power with investing.
Yeah, like investing in, with like a very heavy lens on like an individual's or household's like financial goals. Like, what are we trying to achieve with these investments? And what is the comfort level of risk, or like what is your experience with different types of investing, and how does that make you feel? Because everyone's allowed to feel different ways when different things happen. One of the things, a part of our job when we're doing paperwork and we're setting up accounts, is this document called like an investor profile. And what it tries to do is sort of capture a snapshot of the individual, what is the overarching goal, and what risks can and are they willing to bear over their course of their time investing.
Horizon. Yeah. So, what's the intended use for these funds? Is it retirement? Is it a new home in 3 years?
Yeah.
Is it a child's education, right? When am I going to need the money?
Right.
And how much risk can I objectively take, and how much risk am I comfortable taking? And therefore, what kind of allocation should I have to different asset classes to try and achieve, the best chances of meeting that outcome?
Yeah. So like currently we are in a point in time when you flip to that second page of that investor's questionnaire where it says, how would you feel if your $10,000 or $100,000 invested is now $90,000 or $9,000? How would you feel if it's that $10,000 was $8,000? How would you feel if it was $7,000?
Yeah, what would you do?
What would you do? Yeah.
Would you decide to sell it all? Would you hold tight, or would you add more? Are essentially the answers to that question, right?
And answers are different for different people in different circumstances based on their investment objectives.
And one of the problems with those questionnaires is that it asks those questions in a vacuum of kind of perfect reality, right? So what would you do if your account fell by 20%? Well, that on its own, I think a lot of people would say, well, that sounds like a sale. It sounds like I should buy more because it could go up more. But the reality is it's not very often that things will drop in value for no reason. And there's often something happening in the world that's forcing those types of declines. And if something is happening that's so extreme that it's causing things to sell off to an extent that they're losing 1/5 of their value, it's probably making the news.
Yes.
And it's probably making the news in such a way that you will get nervous because it sounds really, really bad. And there's no doubt that the prospect of the U.S. and Israel going to war with Iran, who's backed by, China and Russia, doesn't sound like a good setup for the next year.
Yeah.
But the fact is, when we ask those questions on a questionnaire, we don't say, what would you do if your account dropped by 20% and the news is screaming at you that World War III is starting, right? That's the context that really matters, right? And right now, it feels as though we're inside that context.
Absolutely. We're able to like point to a time that's happening right now, and like you're rooting through the file and like, remember when we did this questionnaire?
Yes.
When all these hypothetical things that we talked about that might happen, I'm like, they're happening now.
It's happening.
It's happening. So let's like revisit your answers to these questions and figure out what the objective is and your relationship with risk, and see if we have to make any changes.
That's it.
In relation to the Andex chart on the wall with all these events.
That's where I was going. The Andex chart. This is a chart, poster-sized chart that hangs on the wall of many financial professional offices, and it's essentially a document that details market returns over very long periods of time for various markets. It just looks like a meme almost. There's so many lines going so many different directions.
I started collecting them in my garage on the wall year after year. But it's I think the main thing with that document or that graphic is it should help you zoom out.
Yeah, and I think also what it does is it provides us context that if we were to look at that Andex chart, which typically start decades ago, it's a squiggly line with peaks and valleys, but it starts in the bottom left and it ends in the top right. And
which is the present.
Which is the present.
Depending on how up-to-date the chart is on your wall.
Right. And so, I mean, what that tells you is that over time, this line has historically gone up and to the right, meaning that it has gone up in value and it has grown. Mm-hmm. But littered along those peaks and values are events. Like you can point to recessions and wars, civil rights movements, rising interest rates, assassinations, pandemics, and those things happen every year. And despite that, like human beings have found a way to continue progressing. Oh. And so, but we were talking about this at our pre-recording beverage stop.
Right.
And we were just saying, like, sometimes the act of investing is continually betting on human beings and human beings' ability to continue living in this world, right? Because if you're not betting on that, you're betting against that.
Yes.
And if you're betting against that, then
the
money isn't going to help you.
It's not a world you want to live in.
Well, it's not a world you want to live in. And if we do end up, at the end, and it's all over, the uncomfortable truth there is your RSP isn't going to help. It's going to be other things. And so we joke about that. It's a serious thing, but we laugh to make ourselves feel better about it.
It's a very aggressive thought experiment to distill it down to those simple terms.
Yeah, and I mean, at the end of the day, I think part of the reason that you can make very good money and double your money since 2020 is because the price of doing that is sitting through the discomfort of not knowing what's going to happen next. Right?
But there's a lot of good quotes out there that are talking about like participating in market uncertainty and volatility is the price of admission.
Yeah. Because
it's very uncomfortable.
I saw a great chart from he's a blogger. He puts out a lot of material as an author. He wrote Just Keep Buying. His name is Nick Maggiuli. I mean, I may be mispronouncing that. It could be Maggiuli. It doesn't matter. But he charted out sort of the monthly investments of an investor over the course of a very long time, and then showed the growth of each of those monthly investments at the end of a 10-year period, right? And what it showed is that when markets were high, the return on investment was relatively muted, right? Like it may have grown on average by 5 to 10%. But in months where there was global turmoil or heightened uncertainty, the contributions made in those months grew than any other contribution that person had ever made. So you end up in this weird paradox where, it's at those moments when it feels the least comfortable that turn out to be the biggest opportunities.
Yeah.
Right? And that can be a difficult edge to square for a lot of people.
Yeah. For some people based on their investment objectives and risk tolerance.
Right.
But at the same time, like there's a lot of conversations like within market turmoil where just individuals want to know that they're going to be okay, and then like their lifelong, like their retirement savings are safe. And that's when the conversation comes into like diversification and the power of global markets.
And compounding over time.
Yeah.
Right? Yeah. And staying put even when the going gets tough.
Yeah.
Denise Chisholm, she is the director of quantitative market strategy at Fidelity Investments. She put out an article just a couple days ago, just in response to everything that's going on in the world. But she had an interesting kind of paragraph opening up her LinkedIn article. And she says, history shows that geopolitical shocks rarely derail long-term equity investments. Even though the analysis is always imperfect, definitions vary, starting points are messy, data sets differ, the conclusion is remarkably stable. Some conflicts have certainly sparked meaningful market reactions, but most haven't. When you aggregate a broad set of crises from Pearl Harbor through the recent Russian-Ukraine invasion, the average equity return over the following year is 8%, almost identical to equity's long-run annual average. In other words, it's the exception, not the rule, that geopolitical events become sustained market headwinds. And I just thought that was a great kind of paragraph to encapsulate kind of where we are again. I mean, if you think back to a year from today, you know, in 2025, the U.S. president, I hate saying his name, unveiled the Liberation Day tariffs, and he came out with a dumb billboard detailing all these stupid tariffs for the entire globe,
Yes.
and the markets just tanked on it.
Yes.
And you know, he backtracked as he does. And everything corrected. But in that moment, like, people were very concerned.
We're panicking.
And they were
right?
panicking. And really that's what sent stocks lower is, you know, like markets are a function of supply and demand. So if more people are selling than buying, it sends markets lower. And if more people are buying than selling, then it sends markets higher, right? And it can be difficult to sit on the opposite side of that at some time. You know, as advisors and planners, we often say to people, like, we have to warn you of the rain when it's sunny. and when it's raining, we have to encourage you to stick with it because it's going to be sunny one day.
Yeah.
Right? And so
I like that.
Yeah. I think it's part of what we do, right?
Yes.
It's just showing people the other side of things a lot of time. But
Reaching for the optimism.
yeah, it's easy to convince yourself that things are going to get worse from here, or whatever is bad is going to continue to happen. But I mean, human beings have shown time and time again that we kind of come out the other side of these events, and we often come out the other side stronger and more knowledgeable. But in the moment, it sure doesn't feel like we're there, and it doesn't feel like that's going to be the way it turns out, right? So I think our message to people is that unless your goals have changed, unless your time horizon has changed, then your plan doesn't really need to change, right? Despite what's happening in the world around you.
Yeah. Sometimes I like to be a little sort of nerdy about it and understand how an investment moves based on silly things said in the news. It doesn't necessarily matter when it comes to long-term investing, but it helps show the interactions between the two.
Right. And I mean,
but that's just for educational purposes. It doesn't matter, but with clarity and understanding, it hopefully reduces anxiety.
Yeah. Well, and I think sort of the more reps you put in, the more accustomed you get to it. So, you know, we have clients that have been investing for decades, and they can recall numerous events that sent, you know, the world reeling. And they can think to themselves, oh, I remember that. It felt really bad in the moment. And I wish I'd put more money to work. Right? Like, the common thread from people looking back from a bad time period is for them to say, man, I wish I had done more when that opportunity presented itself. And I again, it's not lost on me that I can feel crass to say that any turmoil with anyone, going through tragic events is an opportunity. But at the end of the day, coming out of these times of, unrest, coming out of these difficult times, a year later, like people end up in a better place. And I think that's something that we can hang on to as some hope, right? Is that we've always come out of these bad places and that we just have to believe that's where we're going to end up again in a better place.
The sun will shine once again.
Yeah, exactly. And so we can turn into these real counselors during these times where people are concerned and worried about their future. And I think it's our job to help people keep going and to kind of pick them up and tell them that their plan is still sound. And, we can only control what we control and just to keep going. Right?
Yeah. Clients are allowed to feel how they feel. And like a big part of our job as financial professionals is to provide context, rationale, understanding, revisiting like what we're trying to achieve. And usually through those types of conversations, we get to what needs or needs not to be done.
Yeah, no, that's absolutely reasonable. And I mean, all you have to do is kind of think back over the past few decades and all of the events that have happened that in the moment you may have thought to yourself, I'm not sure if we're going to come back from this, right? Whether it's whether it's a war or a terrorist attack or a pandemic or a financial crisis, like humans have always found a way. And, here we are again, potentially being forced to find another way. But, we have confidence that we're going to do that because the alternative to having confidence in that is, it's kind of a depressing proposition. Ben Carlson, favorite writer of mine.
Yes.
He just released 10 rules for dealing with uncertainty, and I thought it'd be an interesting just read for people listening. Number 1, certainty is inversely related to how right someone will be about the future. So, he said John Templeton once wrote, an investor who has all the answer doesn't even understand all the questions, right? So, during times like this, you're going to hear people talk with certainty about what's going to happen next, and the fact remains, like no one knows what's up. Something could happen tomorrow that reverses everything, and that could relate to your investment account as it skyrocketing because uncertainty's been suddenly removed. Of course, the opposite could happen too, right? But the fact is, we don't know what's going to happen. Number 2, the risk premium exists partly because of uncertainty. Again, to your point, right? This is why we get paid to be invested. It's because we have to sit through the discomfort of uncertainty.
Yes.
So we're paying the price for a good retirement by having to sit through this kind of stuff. Strong opinions loosely held. I like that, right? That just means that, teams are already being formed around the impact of AI, right? I'm AI. Oh yeah, we're anti-AI, right? This is another thing that's got people questioning about the future of things, right? But sometimes you just need to wait and see what's going to happen next. You can't try and predict what's going to happen because there's corners we can't see around. Be skeptical, not cynical is the next one. A healthy dose of skepticism is warranted during times of abrupt change, but cynicism is a terrible trait because it allows you to discount certain things that maybe you shouldn't discount, right?
I like being curious.
Yeah, I would agree with that.
How does that work?
Yeah, how does that work? Why is that happening?
Why is that going down?
Yeah. Discipline matters more than optimization, right? We can all try to optimize things, make them perfect on a spreadsheet. But at the end of the day, if we can just keep putting the reps in that are required in order for us to get where we need to go, it means you don't have to thread needles to survive, right? Focus on what you can control. We talked about that already, right? Timing the markets won't help, right? So there's been countless studies that kind of show, if you miss the 10 best days in the market, that your returns are dramatically different than someone who just remains invested through difficult times. Daryl, who I work closely with, likes to turn that on its head and say, well, what if you miss the 10 worst days in the market, right? Fair point.
Yes.
and my answer to that is the best days and the worst days cluster, right? And it can be really difficult to determine when it's going to flip. You could have an 8% up day followed by a 10% down day. And so determining what's going to happen on any given day is nearly impossible with any kind of consistency. And so you can drive yourself nuts trying to do it. Or you can focus on perhaps making more and saving more and just staying invested.
Yes.
And probably reach a better outcome, right?
I totally agree.
If all else fails, simplify, right? Einstein supposedly said the 5 levels of intelligence are smart, intelligent, brilliant, genius, and simple. Right? So keeping things simple, not trying to complicate things, not trying to come up with complicated systems that are quite fragile, right? And just kind of continuing to do what you need to do. The solution to complexity is not more complexity.
Yeah, and usually complexity is more expensive.
Right. Lastly, he says doing nothing is a decision. So he says, I don't plan on making any changes to my investment plan. My circumstances haven't changed. My risk profile and time horizon are still the same. So I'll continue making my contributions. And I'll make my monthly contributions to that account and this account. But no portfolio changes. Asset allocation stays the same. Savings rates remain the same. I once heard a piece of advice that I appreciated, and I think it's good as like a bit of a pressure release valve. But I read once during a crisis, someone said, okay, if you're in a panic a little bit, right? If you want to panic, just maybe panic with 10% of what you've got. But all or nothing decisions is where you can get yourself into trouble, right? Yeah. And so not making all or nothing decisions during these times can be difficult. And I think also at the end of the day, if you're working with an advisor, this is the time where you can pick up the phone. Like they are on retainer, they are paid on a monthly basis.
Just to have these conversations,
right?
And how they relate to you.
Yeah, yeah. And so we're here for it all day, for anybody that we work with, and even folks that we don't work with. But talk to someone. You can get caught up in your own kind of bubble. And sometimes the worst thing you can do is keep watching or keep scrolling or keep reading. Yeah. Because you can't change anything by doing any of those things.
Yeah, because like our goal with this podcast is not to create a current events podcast, but rather a bunch of podcasts with some very useful information that stands the test of time. Yeah. And understanding how things work over a period of 80 plus years. It is a lot better than just drilling in and focusing on a single current event and how it's going to shape the next 20 or 30 years it is until you retire.
Absolutely. And like opportunities are born out of these times of crisis, right? I mean, I remember in a high school history class, sort of being taught all of the things, all of the inventions that came out of the world wars, right? From like duct tape to satellite technology to cell phone technology. Like sometimes it can be quite amazing what happens when humans are forced to be inventive and utilize their ingenuity, right? And so it's hard to put a silver lining on what's happening out there. But I don't know if we have a choice. We can kind of do what we think we need to do. But at the end of the day, we have to go about our lives, and we have to continue to go to work, and we have to continue to take care of our children. We have to continue to plan for our future. And so we can't kind of hit pause on any of that because there are bad things happening.
Mm-hmm. So talk about it, ask questions, be concerned.
Mm-hmm. And ask yourself at the end of the day, has my time horizon changed? Have my goals changed? Mm-hmm. And if the answer to those questions is no, then your plan probably shouldn't change either. Yeah. But if this is the wake-up call that you needed to realize that you're taking on too much risk, and then do something about it. Mm-hmm. You don't continue to sit with it, right?
There's lots of good financial professionals out there that can answer the question, am I going to be okay?
Yeah, absolutely. We say it all the time. We base our planning work on the fact that stock markets on average have returned, between 8 and 12% over long periods of time. The caveat is people rarely get 8, 9, 10, or 11 or 12%.
Yeah, right.
It's a function of an average of getting a 20% return, then getting a negative 10% return, then getting a 40% return, then getting a negative 20% return. You rarely kind of enjoy the average. It's just not how we're fed returns, right? And so sitting through these periods is what helps you earn decent returns over time. I guess with that, I think it's appropriate just to say that, our hearts and minds are with anyone that's exposed to violence out there, and the world would be a better place if we didn't have to think or deal with it.
Just the needless suffering.
Yeah. But at the end of the day, our focus is helping our clients reach their goals and ensuring that they have enough to live and care for their families with. And so that's our focus on these episodes. And please don't mistake our discussion of opportunities out of crisis as an insensitivity to what's happening in the world.
No, I like that. Yeah, that's a good way to end it.
The comments contained herein are a general discussion of certain issues intended as general information only and should not be relied upon as tax or legal advice. Please obtain independent professional advice in the context of your particular circumstances. This presentation was prepared by Matthew McGowan and Nathan England CFP for the benefit of Matthew McGowan and Nathan England CFP, mutual fund representative with Evangeline Wealth Management, a registered trade name with Investia Financial Services Inc., and does not necessarily reflect the opinion of Investia Financial Services Inc. The information contained in this presentation comes from sources we believe reliable, but we cannot guarantee its accuracy or reliability. The opinions expressed are based on an analysis and interpretation dating from the date of publication and are subject to change without notice. Furthermore, they do not constitute an offer or solicitation to buy or sell any securities. Mutual funds are offered through Investia Financial Services Incorporated. Commissions, trailing commissions, management fees, and expenses all may be associated with mutual fund investments. Please read the fund fact sheet or prospectus before investing. Mutual funds are not guaranteed, their values change frequently, and past performance may not be repeated.